Hey, this is Mark the Meerkat in with the review of the broad markets, good through the February the 21st, 2023. Yes, that's right. Monday is not a trading day. It is President's Day here in the U.S. And by the way, it's also Family Day in Canada. So no trading on Monday. So this will be good for starting Tuesday morning. So first of all, this is Mark the Meerkat. I'm in for Des D7 because he's on a cruise. Couldn't exactly do this video. So today I'm going to share with you, some quick thoughts about what the broad market is doing and what the trend of the market is. And guess what? I think it's stalled a little bit here. So I'm going to give you some golden nuggets about trading. I call them, trading wisdom. So keep track of how many and take note of them as I go along in this video, especially at the end. I'm really building up for a real nice rant here coming up. So first of all, the broad markets. What happened on Friday? Well, we started off the week big and then we kind of pooped out here on Thursday and Friday. On Friday, it was a mixed market there. S&P and the NASDAQ were down while the Dow was up, as well as the small cap Russell. So let's take a look at those daily charts first of all. And here we are on the S&P 500. And last week we were right here at the support line right there. And then it did climb up for 3 days and then fell the last 2 days. Now closing below the 20 moving average and below this symmetrical triangle. Now, so we do have a swing high here and then a swing high in the MACD, and we have another swing high here, but it's a lower swing high. Technically, it's a swing high. Why? Because we have two candles of higher highs and higher lows, and we have two candles of lower highs and lower lows. So that is a swing high, but it's a lower swing high. We have divergence down here, but it's not a higher swing high. So this is a little bit of a bearish reading here, but we did not get back up to a higher high. That's okay. That is on the S&P 500. And how about the Dow? The Dow here on the daily chart, it's just been in this really, really tight range here, going back since December, really. And in last week here, it was getting ready to break out above this resistance line, and no, it did hit another swing high here, so we had to move this up just a little bit to meet this one here from Monday's high, and then we have two lower ones, so that's now a swing high here. MACD is not an issue. And then we've got, next we have the NASDAQ. Now the NASDAQ has been a little bit more bullish. So you look at that compared to the Dow. Dow's been going sideways. And then we got the NASDAQ doing like boom. But now it's just fluttering around up here. It just can't seem to get a direction. And we had a swing high here. And then this is technically a swing high here. Falling there, right? We have two lower lows. And the MACD did not pick back up. And again, it was not a higher swing high, but still showing weakening there. Now, take a look here, man. On Monday, Tuesday, Wednesday, boom, boom, boom. And then just fell down here after, broad news, all kinds of news out there. In fact, you know what? It isn't the news that counts, folks. It's the market's reaction to the news. That's what we have to play. Don't use your interpretation. In fact, the market doesn't friggin' care what you think. It's going to think what it thinks about the numbers out there. And so whether they're worried about inflation or they're, the cost of this or unemployment or what, it doesn't matter what you think about it. It's about the market. So remember, Meerkat trading rule number 10, it's not the news that counts. It's the market's reaction to the news. So there's a little trading a nugget for you right there. So here we are. It's now down here right there at the 301. It's right at the 300 area. It did pierce below the 20 moving average here on the NASDAQ and then did finish above it. So that is a possible line of support area. Again, this area here as well. So again, and what did it do? It gapped up here, and when it fell down, it fell right to where it just filled the gap again for the second time. Did it here once, did it twice. All right, so let's go on here to the small cap Russell. You talk about bullish. This one's also been more bullish than some of the other markets. And right now, but what did it fall down the last 2 days? No. Now it had a lower close and then a higher close on Friday. Right? So this one has not fallen below its 20 moving average. It pierced down below it, but it stayed above it there on last Friday, and then this week here it stayed above that 20 moving average. So this is a little bit more bullish than the other markets. So let's take a look at the financial sector. Can't get a winner without them. And it's more like the Dow here. It's just been slowly creeping up. But did it fall down hard here in the last 2 days? No, not really. And it just tagged right here on this support line, right on that support line, going back to here, and all the way back over here. Came back, tagged it, and then just finished just above that area. But it did close below the 20 moving average, which it hasn't done here. Look at it. It stayed above the 20 moving average all the way since the 3rd of January. The entire year it's been above the 20 moving average to date, and it just fell down below that. So that's a little bit more bearish, and it was on higher volume. All right, then let's take out the U.S. dollar. Remember, Des talked about the fact that if the dollar goes up, what happens? It's pressure on the markets. And so, again, we were in a falling wedge, and then suddenly it shot out of there. Been high basing here all week until when? On Wednesday, it shot above the high base resistance area, and then Thursday and Friday ended up closing down a little bit, but it's staying above that area there of resistance. So again, that's pressure on the markets as the dollar goes up. How about that VIX? For the last couple of weeks, we've been basically below 20, more back, and after a year of being above 20, in fact above 30 much of the time over the last year. We've been down here just dancing around 20. Again, closer to 15 is more like normal. And on Friday, it pulled back and closed right at 20.02, right in that area there. So again, this is the fear indicator, the VIX. This is the higher it is, the more fear in the markets, the more people are fretting that the market is going to drop. And the lower it is, the more confident they are that the market is going to stay in a bullish trend. And then we got, gold. It continued to fall down this week. And then we have silver continuing to fall down right to here. Now, here's something that I didn't realize. Bitcoin. Are you ready for this? I did not realize how strong Bitcoin had been in the last year here. In fact, let's take a look here. Where it opened here in January up to where it is now. It just closed on Friday right there. Look at this. It is up 47% for the year on Bitcoin. Now, did it fall back here? But other than that, there's been several trading opportunities from a technical standpoint here. But again, up 40% for the year, since the first of the year. So there are different areas of this market that have been very bullish, and Bitcoin is one of those. Again, this is not Texas Hold'em, folks. You never put everything in all one thing. It's not Texas Hold'em, right? Now, so here we go. Let's go to the weekly chart briefly on the S&P 500, and here we go. And just see where are we at weekly. And so on the weekly chart, take a look at this here. We can just draw a couple lines in here, just connecting these swing lows. And what do you see? I could see it before I even drew the lines in. We go from up here, down here, down here. There was a symmetrical triangle right there. But now we'd have to move it up to here. And look at the last 2 weeks here. Lower closes the last 2 weeks on the S&P 500. Symmetrical triangle right in now. This new resistance line up here. Oh, sorry, did not draw that correctly. Right there. Right? And so it's trying to break out. It's not falling hard, but it's just not rising right now. So this uptrend here has stalled, as I said in my earlier title here. Dow Jones Industrial on the weekly. Look at that one, how tight of this one is. So we go again, goes there to here, and we draw here to there. Boy, this is called a bull pennant, where you have a leg, a nice leg up here, and then it's a symmetrical triangle. And this could go either way. It's neither bullish nor bearish. It's a little more bullish because you came up from the downside here, but still pressure here. We are just lingering around here as far as the Dow Jones Industrial. And then the NASDAQ here, it's coming off its lows here, and it's stalled right above its 20 moving average on the weekly chart, just above the 50 moving average on the weekly chart here. So again, it's stalling, folks. So again, our uptrend has stalled. Now the small cap Russell here, it came up, and now it's also kind of wangling around here. It does not have any direction, so it's called being in consolidation. So let's take a look at the S&P monthly chart. We're 3/4 of the way through the month, so this is not a closed candle here, but a nice uptrend last month. It stalled. It went up here and hit the 20 monthly moving average, and then just pulled back here. So we're just barely positive for the month. again, have another week, just over a week here until we are at the end of the week. And again, next week is just only a 4-day trading week. So we're 3/4 of the way there. And Dow, same thing. Look at for the last 1, 2, 3, 4 months, it's been basing right in this 20 moving average area. And then we've got the NASDAQ here has been low basing down here on top of the 50 monthly moving average. And it just started to break out this month, but it's off its highs. It's pulled back a little bit. We'll see if, again, the month is not over yet, so it still could finish either way. And then on the small cap Russell here, low basing down here for the last, 1, 2, 3, 4, 5, 6, 7, 8, 9 months. Has not continued to fall, but starting to rise up here. But again, went up and pulled back here a little bit, and I'm more bullish of the small cap Russell. Okay, that's it for that. All right, it's time for me to get on my soapbox here. First of all, if you're trading at all, the first and foremost thing you have to do to save your account and that you have money to trade is called protect your capital. You need to find out what we mean when we talk about this risk management thing. If you're not making a consistent profit over time, you better find out what this thing that we keep talking about called risk management. Because if you don't know what that is, you have an 89% chance of losing money in your account over time if you're trading your own money. So find out what risk management is. That's the number one thing you better do if you're going to be trading stocks. Not investing. I'm not talking about investing. I'm talking about trading your stocks. And then when you go to trade, don't get stuck on favorites. I only trade Apple, or I only trade MGM. No, you've got to be out there. Which one has a trading opportunity now to give you a high probability entry? So you trade the stock chart. You don't trade the particular symbol that's up there. In fact, if you could cover up what the symbol is, that'd even be better, because then you're just looking at what's happening on the chart right now. And then you can set your trade and let the market come to you. That's right. Rather than chasing after stuff after it gets out of there and suffering from what we call FOMO, with fear of missing out, set your trade and let it come to you. And if it does come to you, then that's great. Then you got in at a high probability moment. But if you are sitting here chasing it all the time, then you're getting in at low probability moments with higher risk. That's the formula for failure. What you want to do is to cut your losers short and let your winners run. Too often we just sit there and we live in hope. And whenever I do a mentoring class, I ask my students, where are they trading from? And you know what? I haven't had not one student ever said that they were trading from hope. A place called Hope. I said, and you're never going to trade from Hope. I don't trade from Hope. I trade in Toledo, Ohio. So, you got to get over this hope thing. So that's what it's out. You got to only trade when the odds are in your favor. That's right, and that's how you do that, is you set your trade, let the market come to you so that you're only getting in when the odds are in your favor. Now, what if it goes the other way, and then goes the other way for a really big thing? Well, if the process that you're following to select your stocks, to either to buy them and go long or to sell them short, that's somebody else's money. Let them take the high risk, low probability trades. You want high probability trades with known risks. I know. So again, I'd watch the CNBC folks and all that, but I'll tell you what, I turn the sound off every morning. I'm just looking for what's the market news. Not that I care what the news was. I just want to see which stocks might be moving this morning because of the market's reaction to that news. And again, typically earnings, right? But there's also other news that comes out all the time. So again, that's for my intraday trading. But I also do swing trading too. It's the same exact thing. On those charts, I have a process to find those high probability entries, and then I manage my risk as I manage my trade to, first of all, reduce my risk till I can get to break even, and then to lock in profits as I go along and let my winners run. That's right. So anyway, this is Mark the Meerkat. We do have mentoring classes. If you want to know what that is, go to groktrade.com, groktrade.com, and let's see if I can pull that up. And again, I've just given you a few bits of wisdom here as far as trading, and I've lost count myself as to how many, and I have one more to give you here coming up from a trader that was out of West Virginia, just a good old boy, Jack. We nicknamed him Jack of all trades, but good old Jack. He's going to give you some wisdom here in just a minute. But Go to Training Mentor. You can find out what our mentoring program is about. It's 3 days of intense training. We give you all of this knowledge and our wisdom from the knowledge that we have gained. I've been trading for over 20 years. It's same with Des, and here he is. Actually, you can go through this here. Just find out what our mentoring program is about. This is a series of videos. They're just 2-minute videos, and at the end of it, it asks you a question, and depending on your answer, it will then direct you to the video to answer that question, and at the end of that, it asks you a question. So there's a whole matrix of videos that but you're going to walk through only the ones that information you want to find out based on what kind of a trader you are and where you are in your trading journey. So see if our mentoring program will work for you. And again, it's 2 phases. One is to get the education that you need, and that's the 3 days of real intense training. And then from that point forward at Grok, and the only reason I associate myself with Grok is that we are then going to mentor you to apply all that to your trading. So you can apply that to your trading. We're going to be there to coach you and mentor you from that point forward. No extra charge. It's all part of our process. Why? Because we want our students to succeed. Now, about once a month is when I give back. That's when I do the training for the 301s. Des does the training for we call 401s, which is a more advanced one for later on. But to master this thing, and people come back 3-4 times and take the concentrated training, because as they go through it, it's so concentrated that initially it's like, oh wow, and then they take care of those, and then they come back and they hear it again. It's like, oh, I didn't even hear that the last time, and now they have that problem, so they keep knocking down things. That's how intense the training is, or how condensed it is, and so people come back and they learn more and more things each and every time, and that's okay. That's all part of it. You can come back as many times as you want, and we do it right online, so you don't have to go anywhere. It's good old Zoom. And so at the end of the day, you're home and you're sleeping in your own bed. And that's kind of a good thing. And so, and again, they're small classes. So I'm not going to move on when I'm doing the material until you understand it. So it's at different paces. And so again, Des is just going crazy there, isn't he? So anyway, that's a little bit about our mentoring program. And again, about once a month we put those on. But at the end of this video, if you're still interested and we've answered all your questions, give us a call. We'll talk about what your trading is and how our mentoring may help you out. All right, here you go. I promised you this. Here we go. Here's from Jack. This is right from Jack. You ready for this? It says, change your frame of mind from predictability, trying to predict what the market's going to do next, to probabilities, playing the odds, and increase your profitability. Whew. That's brilliant, Jack. Thank you for sharing your trading wisdom. And he is a man who just was trading out of his truck, trying to learn how to trade when in our chat room, and he went through mentoring. He went through the education several times, and now Jack is sitting at home with his family, just as he had put in his original trading plan. He said, I want to spend more time with my family. He's now spending 23 hours a day with his family. Pretty cool, huh? Mark the Meerkat, trade well, and may your winners run.